Firoz, just weigh in, right, on the alternate investment options now for a retail investor 1st of April. You've got the debt mutual funds, but without any tax benefit. You've got corporate FDs, you've got bank deposits, and perhaps even hybrid funds now. Could you weigh in on the pros and cons of each of these investment options from a retail point of view?
So Rima, I personally think they're not all at parity even today after this change, after 1st April, right? When you speak of income comes under 5 heads, right? Capital gain head is the most attractive head, in my opinion, out of the total 5 heads of income tax. Point 1. Point 2, if I'm going to get short-term capital gain, I would still not buy a bond directly. I would not buy an FD because I'm getting Section 73. I'm getting Section 73 subsection 3 to set off against some losses I will have. A portfolio will have equity, debt. Equity sometimes throw up losses. I can use those losses for the subsequent 8 years. And every year, equity markets move up 15% up and down. So they throw up losses for you to set off. So firstly, even if this were to be implemented, currently it's at the proposal stage. Even if it is implemented, I would never buy an FD if you have to rationally do it, because capital gain head is the most attractive head. And then you get deferral. If I invest today and don't redeem my debt fund for 10 years, I don't pay tax on accrual for 10 big years. And that itself, effective tax rate will come down. And the last point, Rima, investment taxation is never at a product level. It is at a file level. Let's assume one of my colleagues actually has a child who's a major child. So he gifted 2 crores to his daughter and then invested debt in that. No clubbing provision is applicable. Even a portfolio with 10 crores will get away with 5 crores in debt fund. Also with 2 files can get away paying 8% tax, even if this is applicable. So people have to do more work, have to do more mind application when it comes to taxation, is what this means. She has not categorized, madam has not categorized this as interest income. She's categorized it as capital gain. So people should not see the dark silver lining in the dark cloud. And I still would any day prefer a short-term capital gain as against interest income.
Right. Feroz, within equity, would balanced advantage schemes be, would you expect them to really gain prominence, because it kind of gives you some downside protection, which is the idea with debt, some safety, and the upside for equity as well. Actually, and returns over a slightly 10, 12-year period have not been bad. I think 12, 13%.
Yes, Prashant sir, of course, there'll be most investors will have at least 1/3 of their money in equity, right? So now they will love to combine it by investing in balanced or hybrid funds with at least 1/3 in equity. So you're absolutely right. There'll be flight of capital inside mutual fund, but to different categories. And also the industry will also recalibrate their product offering to make sure that this new inclusion of a third tax. Debt funds are only taxed 2 ways, equity or debt. And all the funds used to get categorized as these 2. Now you have a third taxation. So I personally think the industry will recalibrate, an investor will recalibrate his investments. Most of them at least will have 1/3 in equity. So now they'll be compelled or forced to combine it both and use more hybrid products. Not that they need to change their asset allocation too much. They'll have to change their scheme selection more so. And so I completely concur with you that there'll be flight of capital from one category to another.